everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Spot steel prices fluctuated slightly this week. Domestic hot-rolled coil spot prices fell by 10 yuan ton, while rebar prices rose by 10 yuan ton. On the macro front, the US government ended its shutdown, a record 43-day stretch. As the shutdown concluded, prices of commodities with strong macro attributes such as non-ferrous metals retreated after pricing in expectations. Domestically, October macroeconomic data was weak, with real estate-related indicators declining further. Attention should be paid to the room for reserve requirement ratio cuts and interest rate cuts by the end of November, as policies will focus on hedging downside risks. On the industrial side, weekly output of the 5 major steel products decreased further by 223,600 tons. In comparison, scrap steel prices are falling amid gradual production cuts at electric arc furnace (EAF) mills, but molten iron output stabilized this week. Among finished steel products, HRC output dropped by 79,000 tons week, and rebar output by 85,400 tons week. With steel mills' profits failing to improve recently, overall output is expected to remain stable next week. On the demand side, weekly demand decreased by 63,100 tons from the previous week. Amid weak and stable prices, downstream users mainly restocked based on rigid demand, while traders achieved substantial shipments. Although the peak demand outlook is not optimistic, the slow decline in national temperatures has kept some resilience in construction steel demand. In terms of inventory driven by production cuts, the destocking pace of the 5 major steel products accelerated compared with last week, with an overall destocking of 262,200 tons week. Both social and mill inventories decreased to a certain extent. By product, rebar inventories fell by 163,700 tons, but HRC still faces inventory pressure. Even with production cuts, mill inventories of HRC failed to decrease and instead increased by 900 tons week, reversing the destocking trend from the previous week. In summary, despite further production cuts this week, the inventory pressure in the steel market remains unresolved. Mid to late November will gradually enter the off-season for steel demand. Currently, the alignment between steel output and inventory destocking is not particularly ideal, with marginal demand supported by low-price exports. If demand weakens further, the market is concerned about the accelerating inventory buildup, which will limit the upside potential for steel mill profits and increase the difficulty of supporting steel prices through costs. Currently, the market is more focused on inventory than output. Only when inventories fall to a reasonable level can upward room for steel prices open up. Otherwise, given the current supply-demand dynamics, pressure on the raw materials side will intensify further, potentially leading to negative feedback. Therefore, after recent price declines and production cuts, steel prices may stabilize in the short term. But steel mill profits are unlikely to expand significantly and will be mainly supported by costs. For procurement, it is recommended to focus on rigid demand purchases, especially for products where steel mills are experiencing profit inversion, such as certain special steel grades and billets. Fundamentals continue to improve, but inventory levels remain relatively high year on year. Demand expectations for the later period are still cautious, and after the short-term cooling of macro sentiment, the market is expected to operate under pressure. The easing of China-US tariffs and the resilience of export demand are expected to persist. But given that the contradiction of relatively high hot-rolled coil inventory year-on-year still requires time to ease, the market is projected to face downward pressure following the short-term macro sentiment downturn. Meanwhile, the cost-side support for steel remains intact, and there is potential for further favorable policies to be rolled out. Therefore, after a weak adjustment, steel prices still have room for a rebound. In summary, steel prices have maintained a weak stability recently. For product selection, consider partial procurement of special steel grades and billets at low prices. Okay, feel free to leave your thoughts, questions or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.